All right, good morning, members. I was out of the office yesterday, so I couldn't do a video. I'm going to do it this morning. I'll bring you up to date with what's happening. I've got GDX up here, and what I'm looking at today is this bar. This is the key bar now. The bottom of that bar, we got within 1 penny of it yesterday, and it contained price. If this can't shoot over this morning and get over this and hold over it before the Fed, I'm probably going to flip it, take just small profits, and think about something lower to re-enter. And the reason for it is, well, actually the reason is over on the gold chart. So let me flip over to the GLD and show you that. The GLD is in this range trade right off of this bar. And so this range trade, it's still holding. Now it got under back over, had less volume, right? And so it's set up to try to push higher. Again, if it can't push higher, then potentially this little top range that's holding right now, right, isn't going to hold, and we're going to get a farther drop back, which means we could come into this bar again, maybe even the bottom of that bar, which is the top of this bar that we've talked about all along, as a potential place for this to go back to. So I don't want to get too cavalier here and attempt to push a trade. I think these are great charts in terms of how bullish they are. If you think about it from a different perspective, right, and I'm just use the gold, but you could use the gold stocks. You had this vertical rise, huge volume, that almost always sets up some sort of a range. And actually, I didn't quite draw that in right, but that range was up a little bit higher. That top is right up there, right in that area, right? So it got up there, right? Tested it, eventually got over at 1 bar and then gave it all up. And so it's just telling you that, they went too far too fast. And the good thing here is that instead of coming back deep, right, they're just coming back shallow so far. They could come a little deeper, but now if you take that same angle of ascent that looked like that and you pull it over, you can see it's getting more towards a 45-degree angle. You work this off with time instead of price, allows it to go higher eventually. It's just a question of where do you get in, where do you put your money on the board and leave it on the board. And ideally you want to do that when it's about ready to take off, and you want to get that at the best price you can. And so the risk in the gold market, the risk in the gold stocks, is that this range could expand right as far as there. And you want to do most of your buying here, not there. Right? And so that's what you're really dealing with at this particular point in time. If if this turns out strong this morning, then maybe we just hold it into the Fed meeting. If it doesn't, we flip it, we take some money, and we try to do it again, because it looks to me like it's going to take a little bit longer before this thing can really break out. So that's the gold and the gold stocks. The other trade here that we got going on is KMI. Now KMI had a nice big pullback, gave a potential entry point. A lot of people tried to buy it, missed it. Some people were talking about it yesterday. I think that what's happening here is this is also going to come in deeper, because the oil market is even less bullish than the gold market. And you've got this range that you're dealing with. I wouldn't be surprised to see it come back deeper, right? And that's where you typically want to buy it, not up here at the highs. It's going to be up today because oil looked like it was going to bounce. Oil actually held, and I'll use the USO, but the WTI is probably a better contract. I just don't have it sitting here, but these look about the same. The key yesterday is this little ledge right here held on the oil market. So it's going to try to bounce back into this top. That's where we probably should think about taking potentially a little bit more in terms of profits on KMI if we're going to take some, and then try to buy it back deeper when oil comes back down farther. And so that to me looks like the trade on the KMI. There's another stock that I'm watching. I want to point this out to you as it sets up. We're going to try and trade this one. This is Ulta. Ulta came out with earnings, had a huge spike up. This spike, from this day to the opening the next day, what was that, about 17%, I think? Yeah, 17%. So Ulta has a nice big, rally to the top side. that typically ends up testing that low. And if we look at some other things, and we'll do that if we actually make this trade, if we look at some other things, we're going to find out that that low, both on this time frame, on the weekly time frame, makes a lot of sense to buy in terms of a post-earnings flip trade. And so we'll deal with that trade when we have a chance, if it sets up. Hopefully it will, and we can do a video on it. So watch the tape today. We may do something with GDX this morning. That's it for today.